Hey folks, I'm Kevin, and today I want to chat with you about stop orders, or you might have heard of stop loss orders, and why they're so important for you as a trader in the crypto space. You need to at least understand it and how it can help you out. So this video is created for that purpose. I'm going to touch on all the different types, when to use them, some pros and cons, and show you some live examples on various exchanges. Now, before I go any further, I do want to thank Bityard Exchange for sponsoring this video. They're the Singaporean contracts trading exchange that I've covered quite a bit on this channel so far. So if you want to check them out, I'm going to leave a link down below where you can click and visit them. And without further ado, you know what to do. Sit back, relax, and just keep on watching. All right, so let's start at the very top, right? What are stop orders? This is the type of order that buys or sells a stock or a contract when it reaches a certain price. And there's many different variations of this, a lot actually, that I'm going to touch on in a bit, and they're all for different circumstances and situations. Just by using stop orders beyond your standard buy and hold strategy can be very critical for your ability to reach your investment goals and find success in the trading world. So like I said, there's many types. What are all the types? First is just stop orders. And when that reaches your specified price that you set, it turns into a market order. So what that means, if you remember, market orders guarantees that it will execute, but doesn't guarantee at what price. It just takes the next available price, essentially, to fill your order. I say stop orders, but there's really two types of this. One is sell stop orders, which is the traditional type you probably think and know of. And that is you enter a stop price below the current price that it's at right now. And when it reaches that level, it turns into a market sell order. So if the price starts to drop, you're like, oh no, I don't want to hold this anymore. Sell. It's going to sell it at the next best price once it hits that particular point that you set. On the other hand, this is a little bit less common, but it's called buy stop order. It's the other way. So you enter a stop price above the current market price, and then when it reaches there, it turns into a buy market order, right? And there's some reasons why you want to use this that I'm going to cover in a sec. So this also brings up another important delineation, right? So far we've been talking about stop market orders, but there's also another type called stop limit orders. And so in this hand, instead of turning into a market order where it just executes as best it can at the next available price, it turns into a limit order. So you set a stop price and a limit price in this case. So if the price action hits the stop price, it will execute at the limit price or better. And then if it goes beyond that limit price, it's just gonna not execute and you're going to be holding that position. And so when I say past the stop level, like I said, remember there's buy and sell stop orders. So your limit price has to be below your stop level if you are making it a sell order, and above your stop level if you're doing a buy stop order, right? It's a little bit hard to think about, but it's just on the flip side, but the same function essentially. And then there's another wrinkle I want to throw on top of this, and that's trailing stop orders. These work for both buy and sell stop orders, but essentially your order trails the best price by fixed dollar amount or a fixed percentage. So let me just give you an example, right? So let's say you set a trailing sell stop order at 10%, okay? So if the price continues to rise and rise and rise from when you bought it at 50 to 100, and then it falls to 90, then your stop order will execute as a market sell for that example. That's one direction, and there's many different wrinkles. You can do it with market, limit, buy, sell, both directions, right? So now you may be wondering, in what all different situations would I want to use each one? That's a fair question to ask. First, buy stop orders. These are the ones that we don't encounter as often, but essentially it can be used to protect short positions if you're ever entering those, because shorts they have unlimited losses if it keeps going up, right? You can go up infinite and then you'll owe infinite in that case if you have a short position open. In that case, these buy stop orders protect you from those unlimited losses by using this. On the other hand, it can also be used by bulls to profit from breakouts, right? Have you heard of breakouts before? Essentially, if your price is going like sideways and you have a resistance level, let's say it breaks that resistance level, then in the technical analysis world, it stands to reason that it's going to keep going and has momentum of going higher and higher. So if you predict that it's going to continue to run the price, then your buy stop order will buy that for you and you can ride that momentum until you decide to sell it later for profit. Now, stop limit orders, these are good for when the price is super volatile and it moves a lot, right? So these limit orders, you can guarantee execution price. If it's really volatile, then it may hit it often, but it might not be long until it returns back to the level again, in which case that's okay since you have a limit order. On the other hand, market orders are great when there's some like fundamental change with the company or crypto project, for example. Let's say it drops a ton and the price may not recover to that for many years, right? In that case, you just want to sell. You don't care about guaranteed execution. You want to sell the next best price. And that's when a market order would be better to have in this scenario. Now, when are these trailing stop orders good? These protect your gains when you're in profit and things are moving in your direction. So you're getting more and more profits. So you can leave a trade open and continue the profit as long as it keeps on riding in that same direction. That's when this trailing order, because it follows the best price, remember? Whereas if you just hodl it all the way up and all the way down, for example, then it was fun, but you really just wasted your time because you ended where you started. So some things to keep in mind when using these different stop orders. One is that these are great because they can help you execute your strategy in a more hands-off manner after setting it. And these can leave emotions out of play because you just set it beforehand and then it goes to work for you when the situations align. But you do need to carefully set it though, because it does require some chart and technical analysis to identify good levels to set these at. You don't want to just set it randomly, right? Or else if it just hits too easily, you're going to sell and it's going to swing back up and go even higher. That's not what you want. I mean, that may happen sometimes anyways, it's probabilities, but you don't want it to happen too often or else it defeats the purpose. Like I said, there's many different types and you need to determine the type that's best for your particular trade and position and strategy. It also doesn't need to be all or nothing, right? You can do this for part of your positions or portfolio. And then finally, this doesn't mean that you won't have losses at all. It does protect you, but it's not foolproof, and it is probability when it comes to risk management and trading. So do keep that in mind. So how does this apply to crypto trading in particular? Because like I said, this happens in both the stock world and the crypto world. So one thing to know is that not all exchanges offer it in the crypto space, and especially they may not offer trailing stop losses. So if it doesn't and you want to do that, you'll have to do it manually or use like automated software or bots to do it for you. But a lot of them do offer simple stops, and I'm going to show you a few in a bit. Also, I did mention at the very beginning, this works for both the shares or the coins and derivatives and contracts like futures or margin contracts based on top of those underlying assets, right? A stop order can mean that you sell Bitcoin that you have there, or the buy stop side of it, if you have a USD balance and you want to buy Bitcoin when it exceeds a current price. Or if you're doing derivatives trading, it could mean close a contract if you open a long or short position with margin or leverage, right? So in this case, it's especially important to set stop loss levels, or you can easily lose your whole amount and get margin called and get liquidated per se, right? And you don't want that. You want to be responsible when doing that, or else it's just way too risky and degenerate. So now let's take a look at a few exchanges and their interfaces, which I'll show you what stop orders and how to place them. Okay, so here's exchange number 1, and I'm at Bitcoin USD. As you can see, there's market, limit, and stop orders. And if I go to sell stop, let's say I have like 1 Bitcoin on here, and then current price is 10,000, about 600. So I would set a lower price, right? Because it's going to sell for me 1 BTC if it hits, let's say, just 10,000. And the limit price needs to be even below that. So let's say here is my limit price. Remember what I showed you before? This is essentially how you can do it on this exchange. And then buy goes the opposite direction. So that's pretty straightforward. And you can do buy stop market, buy stop limit, sell stop market, sell stop limit if you decide to add a limit price, and no trailing orders on this exchange. Okay, and I told you I was also going to show you how to do this in the contracts trading space in the Bitcoin and crypto world. And this is Bityard's gorgeous new interface. I'm going to go in demo mode, pull my leverage back, trade with, let's just say 1,000 USDT worth of margin. And here's my SL and stop loss ratio. I'm just going to type in 20. Right now it's about 10,547. And with this 20% under at 5x leverage, it's about 10,129 right now. You press buy, press confirm, and that's it. And then if it goes below that when I enter my long by clicking on this buy button, then the stop loss will trigger and close that contract. It's pretty similar to all the different concepts, but this is how it works in the contracts trading space. All right, that's it. I hope that was helpful. Let me know down below, as always, if you have any questions, and I'll do my best to answer them for sure. As always, please like this channel, subscribe down below if you haven't already. Check out Bityard if you're curious. Use my link I'm leaving down below. And why not check out these videos up here to find out more of our great content. This is Kevin. I hope you have an amazing rest of your day, and I'll catch y'all next time.